Hi, and welcome to Sunday Night Charts, where we take a look at the charts and trends to help you prepare for the trading week ahead. I'm your host, Steve Van Meter, and let's jump right into this. The trend indicators we're going to look at are the short term, which is over 9 days, and this is very volatile. But what we're looking to see is the short-term trends switch into intermediate term trends, which is a 21-day signal. When you start to see the intermediate terms move, that's giving you a strong indicator that the long-term trend over the 50-day is going to move next, and the ultra long-term at 100 days. We're going to look at the moving averages, the 50-day, which will be in green in my chart, 100-day in blue, and the 200-day will be in tan. In addition, we're going to look at price and momentum. So price is a general direction prices are headed, and momentum is the rate of change. Now, this is not something you'll find in your normal charts. Momentum is not your regular technical analysis data that's available, but we're going to look at that. And a bullish indicator for both is positive, and a bearish indicator for both is negative. Momentum often, but as you'll see today, certainly does not always lead price. Now, what is technical analysis? Some of you think this is hocus pocus. I get it, but really, technical analysis attempts to determine where buyers and sellers are at. Resistance is the level buyers can't break, and support is a level sellers can't break. Or think of it this way: resistance is where sellers are at, and support, that's where buyers are at. Now, I know a lot of people draw a lot of lines on charts, but the key is, where are the buyers and where are the sellers? Now, let's start with the S&P 500. Over the short term, we've got a bearish signal on price. Momentum is bullish, but over the intermediate term, we've got both bearish signals on price and momentum. Long-term price still remains a little bullish. Momentum is slowing down. That's bearish. And on the older long term, we're bearish on both signals. Now, what we're looking for, just to prepare you as we go through these, is you want to see where the short term starts switching, then the long term or the intermediate term switches, long term switches. That's how you know you're in a trend. And when the trend's going to reverse, well, it's going to start at the short term. So the overall picture for the S&P 500 is a bit of a mixed bag. Let's take a look at the charts now. We've got this massive megaphone top that's been building for a long time. And in technical analysis, when you see a megaphone, it is more often than not a reversal pattern, meaning whatever the prevailing trend going into it is going to reverse. And when it does, it means it's going to break through the bottom of the megaphone. Now, how far it goes, who knows? But at least in the initial picture here, you have this massive megaphone top with the next bottom of the megaphone sitting somewhere right around 2100 on the S&P. Now, most people are all of a sudden worried about this reversal here, even after they were very excited. There was this 30% drop earlier this year, but now people are jammed into this trend, and you see this rising trend line. And I said, when it gets broken, what happens is you get stop losses and other positions start to trigger and sell. Now, what eventually happens if this trend continues is there are a lot of computer traded programs out there in the annuity space, in the managed money space. It's all over. There are a lot of money that is computer traded, and when that momentum shifts, well, they turn from buyers, which drove this up, into sellers. Now, the next major level of support where we've seen buyers at on the S&P is about 31, say 30. So anyone who's worried about this trend, all of a sudden, look, there's plenty of support. All the market is doing right now is just giving back some of these gains that, well, really didn't make a whole lot of sense to begin with. But your next major level of support is 3130 on the S&P. So keep an eye out on that to see if it holds there before you get too bearish. Let's take a look at the NASDAQ 100. Similar picture to the S&P. In the short term, we've got mixed prices, bearish, momentum is bullish. Intermediate term, both are bearish. Long term, price is bullish, momentum's bearish, and the ultra long term, both trends are bearish. Let's take a look at the charts for the NASDAQ 100, and here you can see it does appear to be forming topping pattern. And the NASDAQ did have a massive run-up, blasted through its prior all-time highs and didn't look back. But where is the major level of support on the NASDAQ? It is at 550. And right now it's touching the bottom of its 100 or 50-day moving average in green. And remember, trends start when stocks break the 50-day and reconfirm it. Now, the NASDAQ never reconfirmed its 50-day up until earlier this month, and it failed. So it's now working from the bottom up. If it confirms that it's not going to break through its 50-day moving average, then you're seeing the beginnings of potential trend change, which price and momentum are starting to confirm. But if you're bullish on the NASDAQ, well, your major level of support again is 10,550. And right now this should be considered noise. But do remember, it did break that upward trend line. So the bulls really need to defend this 10,550 level before really there's a major opinion change on that. Let's move on to the Russell 2000. A similar picture here. The short-term price is bearish. Momentum still bullish. Intermediate terms are both bearish. Long-term price bullish. Momentum's bearish. Ultra-long-term, both are bearish. Again, same picture as the other two major indices, but let's switch over and take a look at what's going on with the Russell 2000. It's sitting right at this kind of prior level of support. So buyers have been very consistent, say right around this 1450 level. So those who are bullish on small caps and the U.S. economy really want to see this price level hold. If it doesn't, there is a major level of support that goes all the way back to that 1350 to say 1375 level. This is a pretty strong area where buyers have been playing out in there. And maybe we could even move that line a little bit higher to say maybe between 1350, 1375, kind of where I had it down a little bit lower. If the Russell does not hold here, look for it to come down and reconfirm 1375. Now, does this mean the overall trend is broken if it falls down here? No, you can still say there's a bullish trend, but both price and momentum are saying, hey, there's something potentially bigger brewing on the downside on the Russell. Let's move on to the energy sector. Now, the ETF XLE, your largest energy sector ETF, largely made up of both Chevron and ExxonMobil stock, which account for approximately 45% of the ETF. In the short term, price is bearish, momentum remains bullish. In the intermediate term, you've got, again, a mixed bag, bearish on price, bullish on momentum. And a long term, again, similar pattern, except now flip, long term price is bullish and momentum is bearish, and ultra long term we're still seeing both bearish trends. Let's flip over and take a look at the XLE, and we'll zoom in a little bit. What you can see potentially now coming is a double bottom, not yet, but it's getting close to it. So what bulls are looking for here is a lower low in price, and they're going to want to see the buyers that were at, say, roughly $28 on XLE come back in and hold that level. If not, look for it to retest that $22, $23 level where you'll see people come in and buy it, hoping it's a double bottom. If it doesn't hold there, now you've got a massive bearish view for the whole energy sector. And with the majors laying off and cutting benefits, believe me, they don't think that oil prices are headed higher at all. But you can see it broke that level of support at 30, just under 34. It reconfirmed, became resistance, and now price is heading down, looking to find support around the $28. So keep an eye out for that this week. Moving on to the financial sector, remember XLF, this generally trades opposite, or inverse, not exactly, Treasury bond prices. So as financials go down, that's supportive for bond prices going up. In the short term, bearish across price and momentum, bearish on the intermediate term. And the only bullish signals we have is on the long term on price and on the ultra long term on momentum. But this is showing that XLF is rolling down and heading lower. Let's take a look and see how it is on the charts. And sure enough, it broke out of the supply zone. Let's zoom out. And this supply zone has been, pretty consistent. And if we duplicate this and bring it down, you can see, and I'll change the lines so they're dashed. You can see the supply zone very clearly here on XLF. And it's trying to stay right within that bottom of that zone. If it holds here, this is constructive for XLF. If it doesn't, it's saying it's headed down even further into this, say, $21 range. But right now, for those of you who are just listening, can't see the charts, the supply zone is right in the low, say just pretty much the $23 to $24 range is where that supply zone at. And if you're constructive on bank stocks, it needs to hold that. If not, well, you're definitely going to see lower prices in financials, and that should lead to higher bond prices. Let's move on to the utilities. Bearish signal on the short term, bearish signal on the intermediate term, bearish signal on the long term. The only thing utilities have going for it is bullish momentum signal on the ultra long term, but that most likely will flip, because what we're seeing is, again, short term leads bearish signal leads to intermediate term bearish signal to long term, and that should tell us that the general direction of the utility sector is bearish across the board. How about industrials? Short term is starting to flip over. Intermediate term has flipped to bearish. There's still some long term and ultra long term bullish signals out there, but we're starting to see that trend change. And the intermediate term is pretty powerful. That's where you really start to see trends change, is there. And let's quickly take a look at the chart on that to see if this trend change is happening on the charts. Where are you? There you are. And yeah, you can see what's looking like a topping pattern here. So the trend is slowing down, starting to potentially roll over. And if that does happen, that is signaling that more down, that the industrial sector is headed lower. On to the large gold miners, GDX. Everyone's super bullish gold and the miners. Short term bearish signals, intermediate term is rolling over. Remember, I said this is really, if you're bullish on the miners, you're bearish on the dollar. I think we know that, and I'm bullish on the dollar, as I've been very, very clear about. Long term price is still bullish. Everything else as bearish signals. Let's look at the miners again. Everywhere you look, people are super bullish to mining stocks, but look at this supply zone up here. You really can't deny that sellers have been up here selling, and now price has some downward move going to it. As the data suggests, your next major level of support for GDX is going to be in this $33, $34 range. More closer to, I'd say the $33 range right in here. Topping pattern. Do I see this going back down in the 20s? Yeah, I do. And that's because I think the dollar's headed a lot higher. How about we take a look at emerging markets? This is kind of a mixed picture here. Short term, price bearish, momentum bullish, intermediate term bearish across the board. Long term, price is bullish, momentum's bearish, ultra long term bearish and bullish. So you kind of see that this thing, it's not sure. Let's take a look at the chart on the EEM and see what we can find. And sure enough, it looks like a topping pattern that is kind of moving down as the dollar is looking to move higher, which is what we would expect. Major level of support for EEM is going to be sitting right around $41 on there, and we can zoom out and see that's a pretty strong level in the past where buyers have been wanting to buy. If it doesn't hold there, then you really can look at this as a supply zone, kind of coming right back to the lower, high $40 range that you can see the supply zone sitting right in there. All right, on to long-term Treasury bonds, which you do cover every week or almost every show. So we'll look at the picture here. Price is bullish, momentum still bearish on the short term. You're starting to see a potential flip here. Intermediate term is still bearish, and long term is bearish, and ultra long term is ever slightly bullish on momentum. So what we're starting to see is a potential switch now on bond prices. So what we'd want to see over the weeks to come is a short-term flip, momentum being bullish, and then that move into the intermediate term. Let's take a look at TLT. The chart here, remember, this was very bullish or very bearish last week, sitting under his 100-day moving average. It blew, could not break through, kept trying. Finally, on Thursday, it broke through, held the 100-day on Friday, confirmed it both days. as prices moved down and tagged and moved higher, suggesting that now TLT's got to run and retest its 50-day moving average in green, but its major level of resistance is right here around 166.62. It's knocked on this door twice, knock on it 3 times. It looks like that will usually be the trigger to break through. So if this price trend changes, look for the first level of the 50-day moving average, then this resistance level before it makes a move at its all-time high, I shouldn't say it's not its all-time high, but this high in this range, which we can zoom back, which is run about 6 months, and 172 is the top of that range. It's knocked once, knocked twice. Third time should be the charm. Let's take a look at gold or high yield bonds. We had some requests for that. Short term is bearish because remember, high yield bonds tend to lead equity prices. Bearish on the short term, bearish on the intermediate term. Long term still showing a little bullish signal on price, and ultra long term is showing a little bullish signal on momentum. Over to the high yields, HYG, and you can see there's a very nice supply zone. We'll zoom that in a little bit. Sitting in between, say, $82. Say $82 to $83. There's a supply zone. So it's just tagging the top of the supply zone. Expect it to move down in here if there are buyers. That's very constructive for high yield. Could see then a trend change. If not, and the overall picture that we're seeing of the short term, intermediate term starting to roll over down, suggests your next supply zone is going to be just under $80, so right in the $79 range, and we'll update that as we see if this holds into next week. On to gold, a very popular trade that has turned short term in the bearish, intermediate term, and is still fighting some bullish signals on the long term and ultra long term. Remember, everyone's super bullish on gold, but let's see where it's headed. So gold futures, you can see there is a small supply zone at around 1800 to 1850 where there's been some buyers. And then your next major supply zone, so I would imagine if it gets into here, there's not going to be a whole lot of buying because the big buying zone, so where you've seen a lot of buyers is right here, say between 1685 and 1750. There's been a nice consolidation pattern here. There were buyers all through here. They took it higher. Now the real question isn't how many buyers are sitting around 1800 to 1815. It's when you get back down under here, do these buyers, are they still buyers at that level? And that's really important because even in an upward trend, you want to see where the buyers once were still be buyers. So could gold get down to its 200-day moving average and still be in an upward trend? Yes, but in the short term, we're seeing bearish on the short and intermediate term rolling into the longer term trend. And then last on our chart, oh, nope, not last at all. I forgot. Bitcoin's last, but dollar second to last. And we see bullish on the short-term indicator rolling into an intermediate-term bullish signal. And then on the long-term, there's still some bearish signals there. So this is a good indicator of a trend change in the dollar. The short-term changed, and now the intermediate term is changing. So where does that take us to the dollar charts on DXY? And you can see this starting to play out. There was this consolidation zone, and it is broken out over the 50-day moving average. Remember now, generally you want to see a reconfirmation of the 50-day. So will I be surprised if this rolls over and comes back down into this, say, 93 to 94 range? I will not be surprised at all. On the upper end of this, look for resistance right around 95. I would not be surprised if we see 95 touched before we see some pullback. Again, the market's super bearish on the dollar, so I do expect people to come in and sell against that. And then the last chart we have actually we'll go right into Bitcoin because the Morningstar database doesn't have the data on that to pull the indicators. And I know a lot of people are super bullish on Bitcoin, and that's cool. I have no stake in the game, so what's great about this is I can give you a kind of impartial view just based on the technicals. And right now, people want the supply zone here to stick, and the supply zone is between, say, 10,575 and approximately 11,000. And some people are going to say, well, we need this to hold. Realistically, you've seen sellers in this zone. So you've seen sellers all back here. There's only just recently you've seen some buyers. So to be bullish on Bitcoin, you should be actually okay if it comes back down to this, say, 9,050 to 9,450 level, because there's been a lot of buyers there, and that's where the 200-day moving average is. So if you see Bitcoin come down to that level, you're going to want to see buyers come back in, because that's where buyers have been. If you see buyers there, then you'll get another run at the supply zone, and that's where you want to see more buyers step in. But don't if you're bullish on Bitcoin and you see it pull back at these levels, that's totally cool. If it doesn't hold that lower supply zone, and it gets below, say, what did I say, 9,050, well, now you've got a realistic view that perhaps a change in Bitcoin the view of Bitcoin is changing, because you've got a lower supply level now at just under 8,200. So the bullish picture of Bitcoin is still intact. Just look for it to pull down and look for more buyers before it heads higher. So that will be our market update for the week on the charts. Thanks for watching. Again, we'll see you on Monday for our regular macro update. The content of this video is provided as educational information only. It's not intended to provide investment or other advice. It is not to be construed as a recommendation or solicitation by any selling security, financial instrument, or participating in a particular trading strategy. This video was prepared by Steve Van Meter, and personal past opinions expressed in the video that do not reflect the view of Atlas Financial Advising or Steve Van Meter Financial.